If you recently started a business and formed an LLC, you're probably asking yourself, how do you pay yourself? Well, in this video, I'm going to cover that question. How do you pay yourself when you form an LLC? In addition, though, I'm also going to answer some other questions, such as, what exactly did you do when you formed this LLC? What's the treatment from a legal and tax perspective? As well as, what taxes do you pay when you're an LLC? What taxes you could be paying if you elect to have your LLC taxed as an S corporation. If you're not familiar with that, don't worry, I'm going to explain it. It's a strategy that can save you thousands of dollars in taxes. And if you choose to elect S Corp status for your LLC, how do you pay yourself in that situation? So stick around, we've got a bunch to cover. Alright guys, so if it's your first time watching, my name is Navi Miraj. I'm a CPA who helps entrepreneurs save thousands of dollars in taxes, even if you have a CPA. And I do so by creating content on social media, so please do subscribe if you learned something while watching this video. With that said, let's jump into the actual, talking points that I mentioned a moment ago. So I created a visual for you to help explain this a little bit further, right? I think that will help a lot of you understand this. So let's first talk about the second question I brought up actually, which was, before I tell you how to pay yourself, I want you to understand what you did when you formed this LLC. So let's take a look. So you see here, I've got on my screen something that says legal entity types, and across the bottom it says tax classifications. What I mean by this is when you start your business and you don't form an LLC, well, that means you're a sole proprietorship, okay? So up at the top here, I'm saying that your legal entity type is a sole proprietorship. And the asterisk here says a sole proprietorship is not a separate legal entity from its owner. So what that means is if someone wanted to sue your business and come after the assets of your business, they may be able to get the assets related to you personally, so your own home or your own car or what have you. This sole proprietorship entity type is also a tax classification. It's the way you're taxed, okay? So a sole proprietorship is a legal entity type, and it's also a tax classification. Now, that's what this little symbol here says. It says, hey, this is me, an individual. I'm just going out. I didn't form an LLC. I'm starting my business, and I'm going to choose to operate this way, okay? And this box here represents your business. You and your business are the same. That's why I have the individual person here in the box of the business, okay? Now, what happens when you form that single member LLC? So you went to a website and filled out some forms to form an entity, or you did it on your own. When you did so, what happened is you separated your business from you as an individual. So what I mean from a legal perspective is that your business is now separate from yourself. So if someone wants to sue your business, they may not be able to get after the assets of you that you own as an individual, okay? Now I say the word may because you need to be doing the proper things to make sure you get that treatment that you think you're getting when you form an LLC. So I'm not a business attorney. I suggest that you speak with one, but some high level things are making sure you use your LLC in all your marketing material, making sure you have separate bank accounts, making sure you have articles of organization handy. An operating agreement is something that you should have as well. Those are just some examples, okay? Again, I'm not an attorney. Go seek the guidance of an attorney and they'll probably tell you the same thing. So you form this LLC and now you think, okay, I've separated the sort of legal responsibility or the liability rather from your business and yourself. That's great. But what did you do from a tax perspective? Well, you didn't do anything actually. A single member LLC by default is taxed as a sole proprietorship. It's taxed the exact same way when you were a sole proprietor and you didn't form the LLC. All right. So a sole proprietor or a single member LLC from a legal entity type is taxed as a sole proprietor as a tax classification. Okay. A lot of people don't understand that. So what taxes do you pay as a sole proprietor? We're going to discuss that here in a second. Another thing you can do, and sorry, I jumped a little bit ahead there, is elect to have your LLC taxed as an S corporation, okay? A distinction here is that the S corporation is not a legal entity type. You don't see me having a box up here explaining or describing the S corporation as a legal entity type, it's a tax classification. If you form an LLC, you can file a form, it's called Form 2553 with the IRS, and elect to have your LLC taxed as an S corporation. One thing to point out here is you'll notice there's no arrow that goes from the sole proprietorship legal entity type to the S corp, because you can't do that. You can only be taxed as a sole proprietorship when you form or start doing business as a sole proprietor. However, if you're a single member LLC, you have the option to elect S corp status, okay? And don't worry if you don't understand this, I'll explain why anyone would want to be an S corp here in a second. Now, the reason why you maybe clicked on this video is to find out how do you pay yourself when you're a sole proprietor or a single member LLC taxed as a sole proprietor. So now you might understand why I worded the question this way. It's because if you're a sole proprietor and you don't have an LLC, this is how you pay yourself. Or if you formed an LLC and you didn't make the S corp election, this is also how you pay yourself. A lot of people overthink this. It's very simple. Let me show you. So if you, I would hope that if you formed a business that you opened a separate business account at your bank, okay? And let's say for 1 month you had revenue or sales of $10,000. And let's say in order to get that revenue, you also incurred expenses. In this example, I'm saying $3,000 of expenses is what you incurred, okay? What that means is really you had maybe advertising expenses, maybe you drove a lot to earn this revenue, and so you had a business mileage deduction, cell phone expenses, all of these are your different marketing expenses, for example. These are your different expenses. And so you are left with a profit of $7,000 in your business. So if this is all the activity that took place in your business account, then you would have $7,000 of cash sitting there in the business checking account. And you might be wondering, well, how do I pay myself as the sole proprietor of that business? Well, it's super simple. A lot of you guys are overanalyzing this. All you do is transfer the money from your business account to your personal account. So over here, I've got a picture of a cell phone, or you can write yourself a check. It doesn't really matter. Just transfer the money from business to personal. So let's say your personal account had a balance of $1,000. You just transferred the $7,000 over from business to personal. Now your new balance in your personal account is $8,000. That's all there is to it, guys. You don't need to complicate it. That's all you need to do. Now, I wanted to create this slide here and just go over this. I know there's a lot of text on here, but these are some mistakes or some questions I get about how do I pay myself. So that transfer that I just talked about a moment ago, it's called a draw, okay? It's not a salary and it's not a paycheck, okay? So don't refer to it that way. That would be sort of technically wrong. You, the sole proprietor, are not an employee of the business, okay? So don't treat yourself as an employee, and you shouldn't be calling yourself an employee. That said, if you do hire employees, you'll need to pay them properly and pay payroll taxes and file payroll reports. So for example, if you had an employee, you're obligated to pay Social Security and Medicare taxes for that employee, as well as you may have to pay state unemployment insurance for that employee, okay? That's you as the business owner are responsible for those items. All right, regardless if you transfer the money out of the business or not, you'll still pay taxes on all of the profit, okay? And I'm gonna explain what I mean by that in a second, but the point that I'm trying to make here is if you leave the money in your business account, you're still gonna get taxed on it, all right? So you can leave it there if you need to invest that money in other like business equipment or other items related to your business, but whether you leave it there or transfer it to yourself personally, you're gonna get taxed on the profit of your business, all right? That's a great transition over to this next slide. I know you see a lot of things here on this slide, but bear with me, I'm gonna explain it all to you. So here on this slide, I'm comparing what taxes you pay as a sole proprietor, what taxes you could be paying as an S corporation, okay? So in this example, again, I want you to understand the language here. In this example over here on the left, you're a sole proprietor or a single member LLC that's using the default, tax treatment. So you're being taxed as a sole proprietorship, right? And you went out and for the year, you had $125,000 of revenue in your business. You also had $25,000 of expenses, right? That gives us a nice round number of $100,000 in profit that you earned. So you might be asking, what taxes do you pay if you earn 100 grand of profit in a sole proprietorship type business? Well, you pay a couple different types of tax. You pay self-employment tax on this $100,000, and you're going to pay federal income tax. And if you live in a state that charges state income tax, you're going to pay state income tax. So let's look at some estimations about how much you would pay. So 100 grand times your self-employment tax rate, that's 15.3%. If you don't know what self-employment tax is, that's okay. I don't expect you to. That's Social Security and Medicare taxes, all right? So you have to pay this as a business owner, 15.3%. So that's $15,300 in self-employment tax alone, all right? Then what happens is you take this 100 grand and you're gonna, file your federal income tax return at the end of the year. And that income is going to flow through the different tax brackets that we have here in the US. That's called a progressive tax system. But when it flows through all of that, if you're single and you earn this amount of money, you're probably going to pay around 15%, maybe 12% in taxes by the time you get your standard deduction and all that. I know it's a little bit deeper dive of a discussion. So just trust me when I say that you're going to pay around 12 grand in tax. You may pay a little bit more, or it may be a little bit less. And you're going to pay state taxes as well, right? So the $100,000, depending on what state you're in, might be around 4 grand or so. If you're in a state like Colorado, might be like 4.5%. If you're in a state like California or New York, it's going to be much higher, right? So I'm just using 4% as an example here. So again, 100 grand times the 4% is about $4,000. So the main thing that I want to sort of transition to now is, what could be some tax benefits you could get if you elect to have your LLC taxed as an S corporation. So I want to sort of describe what I'm saying there, and that is you would form an LLC, file paperwork with the IRS to have your LLC taxed as an S corp, and you can treat yourself as an S corporation and get this favorable tax treatment that I'm about to talk about. So what taxes does an S corporation pay? So an S corporation, if you're deploying the strategy with your business, is what happens on the $100,000 of profit is you're going to split that $100,000 into two separate buckets. And I'm going to call that a salary here. You may hear that referred to as a reasonable compensation. And I'm going to split it into what the tax form is called a K1, but this is sort of like a distribution of the profits from your business. So the $40,000 that you take as a salary in this example, and the $60,000 that you take as a distribution still equals the 100 grand, right? So that's the $100,000. The reason why people do this is because if they take a salary on the 40 grand, well, now only the salary is subject to the 15.3% in self-employment taxes. All right. So if we do the math, 40,000 times about 15% is $6,120. On the distribution, the transferring of taking the business profits and just transferring it to your personal account, the distribution portion that you're not running through payroll is the 60,000. Well, you don't have to pay self-employment tax on that. So it's $0 is how much taxes you pay there as it relates to Social Security and Medicare taxes. What does an S corporation pay in terms of federal and state income tax? Well, it's the exact same thing. When you are an S corp, this salary flows into your personal tax return. This distribution flows into your personal tax return. And that's where you pay the same taxes or very, very similar taxes that you would pay as a sole proprietor. So it's $12,000 and $4,000 respectively. So what's the difference here? How much are you saving? Well, in this example, there's a tax savings of almost $9,000, right? And how we got there is we're taking the $15,300 in self-employment tax that you were going to pay, comparing it to the $6,000 or so that you're paying here with the S corporation. So if you're a little bit more technical or a little bit more business savvy, you know that there's some other deductions that I'm not counting here, but this is about the tax savings. Let's say it's 8 grand that you're saving in taxes, which is great. Now, what happens when you're an S corp in terms of how do you pay yourself, right? You clicked on this video, and if you're still with me, you were watching to find out how you pay yourself as an LLC. But now you might be wondering, well, I don't want to be in an LLC. I want to be taxed as an S corporation. Well, it's a little bit more complex, and I didn't really want to miss anything. So forgive me for all the text on the screen. I'm going to read to you a little bit. But for the salary portion of the S corporation money, you are now an employee of your business. And I made that distinction earlier. When you're a sole prop, I'm like, hey, you're not an employee. Now that you're going to be an S Corp, you are an employee of your business. You need to determine what a reasonable compensation is for you in your business. In the prior slide, I used the example of about 40%, so $40,000 salary, right? Some other things you'll have to do is you'll need to register with your state for an unemployment tax account number, because you will have to pay unemployment taxes. Even if you never file for unemployment taxes as the business owner, you still have to pay these unemployment taxes. So you need to register with your state for an account number that they'll give you, and that's where you pay the unemployment taxes into. Same thing, you're probably going to pay income tax on that salary. So you're going to register with your state, if your state has an income tax, for a tax withholding account. I know this is getting a little bit complex, just stick with me. Another responsibility that you'll have is to file payroll reports on either a monthly or quarterly basis, depending on how many employees you have in your business besides yourself. And you're going to have to pay payroll taxes on the amount that you pay yourself as a salary. So that's the Social Security and Medicare and state unemployment. I know that's a lot, guys. I know it's a lot to digest. The reason why I wanted to point out all these different things is because I don't think you should be doing that on your own if you're a business owner. If you're a business owner, you should be trying to earn that next dollar of revenue, or do your advertising or marketing and focus on getting as much revenue dollars as you can. You're probably going to outsource this payroll piece to either your accountant or CPA, or you can hire a payroll company to do it all for you. That's what I recommend, as opposed to, trying to fiddle around with all this paperwork on your own. The K1 portion, which is the distribution that you took, that's very simple. You don't have to worry about all this payroll tax for that part. For the K1 portion, you're just going to transfer money from your business checking to your personal, just as you did when you were a sole proprietor, when I went over that slide, right? You just use your cell phone or your online banking and transfer the money from business to personal. So that's how you pay yourself in an LLC. That's how the LLC is taxed, why you may want to be an S Corp, how the S Corp is taxed, and how to pay yourself when you are an S Corp. Something I want to mention real quick is my website. I'm going to transition there for a second. If you learned something in this video, once again, please do subscribe. About 90% of the people who watch my videos are not subscribers, believe it or not. And you can visit my website where I'm going to teach you a little bit more. What I mean by that is I'm actually in the process of developing a course. It is in production. So in the meantime, you can sign up for the wait list. In this course, you're going to learn a bunch of different tax strategies, how to implement the S Corp strategy properly, how to hire your minor children in the business, how to, put up to $50,000, even more actually, in a retirement account if you wish. Those are all things that you're going to learn, not just how to do it and how that can save you thousands of dollars in taxes, but how to actually implement those strategies in accounting software. Further down, you'll see that, hey, if you watch this video and you want to form an LLC or want to be an S corporation, you can do so with these different companies. We've got Inc. Authority, Inc. File, Zen Business. These are different companies that I researched, and I was amazed to see that with some of these companies, if you click on the right buttons, you don't have to pay any fees. They'll just do it all for you. You might have to pay them to apply for an EIN number for you, for Inc. Authority, for example, but they'll form the LLC for free. They'll do the S Corp election for free. They will even be your registered agent for free for the first year. If you want to, if you learn something, but you still have questions, you want to schedule a Q&A session with me, I've made myself available for 30-minute and 60-minute sessions. So you can just use this time to ask me a question if you wish. Further down, there's other videos that I produce. You can go there and learn about those different topics. All right. With that being said, in a moment here, another video is going to pop up soon that I highly recommend that you watch. If you got value out of this video, chances are you're going to receive information in that video and get a lot of value in it as well. In the meantime, I hope you learned something in this video. And with that said, I'll see you on the other side.